You're listening to The Whole Truth, a Resources Rising Stars podcast.
Welcome to a fantastic episode of The Whole Truth podcast. I'm Paul Armstrong. I've just had a really entertaining chat with David Flanagan, the Managing Director of Arrow Minerals. Anyone who's not aware of David must have been living in a cocoon in the past few years. In his current role, David's been drilling out the Simandou North Iron Ore project, which sits right next door to the Simandou project of Rio Tinto and the Chinese, the world's biggest high-grade iron ore project, now referred to as the Pilbara Killer. But David's just added another string to Arrow's bow. He says that the company has just secured the rights to a big bauxite project known as Niagara. It sits halfway between the Simandou North project that Arrow has and the port, very conveniently located along the railway line. Bulk commodities are all about transport, rails and ports more than they are about mining. Hence David is so excited about what he's got his hands on here. He does know a bit about the project and what's in the ground. He can't say too much about the previous resources because the stock exchange will pin him to the wall. But others like Barry Fitzgerald have had a look into the records and they've published it, and we discussed those in the Whole Truth podcast today. Have a listen to this episode, see what Flano's got to say about his bauxite project, why the world wants so much more bauxite, and why he's desperate to get into Niagara and start drilling holes. Flano, a bloke with your well-known sort of zip and dash and style wouldn't normally be expected to go into the relatively boring world of bauxite, would they?
Well, people used to say that about iron ore. Now look what's happened.
Well, bauxite has, bauxite has established the rather unfortunate name of boring bauxite over many years. It has become the domain of the big companies like Alcoa, Alumina, etc. Why would a little company like Arrow want to get its hands on a big bauxite project?
Yeah, good question. Probably go back to about November last year or December last year when I started talking to these guys at Arrow. I started to realise this railway line was being built and there's a port being built and that there's a whole bunch of tenements for all sorts of minerals along that railway line, and I've been looking at different deposits ever since. Now,
to put our readers in the picture here, Arrow has been drilling the Simandou North project, which sits right next door to the major Simandou iron ore project of Rio Tinto and its Chinese partners. As you just say, a railway line goes right through your back door, and the whole plan with the Simandou North project has been to put the iron ore from your project on that
access. All about the rail.
So what you're saying is it doesn't matter whether you put iron ore on it or bauxite on it.
Yeah, so it's about how do we maximise our skills base in that region around that infrastructure, because it's going to turn what is dirt into ore and value for shareholders.
Well, it's always been said that bulk commodities like iron ore and bauxite are more about logistics and transport than they are about mining.
Yeah, it's all about that. And the other thing is when we're mining iron ore, and I've done that before, it got to a point where it just felt like we had stumbled across one of the best kept secrets in the world, and that is how much money can be made in iron ore. And I feel like I'm looking into bauxite where we've got access to infrastructure, and the same thing is happening in some of those major companies. They're making very strong cash flows, and I don't see why a company like us can't do the same thing.
So how did all this start? You've been drilling the Simandou North iron ore project. You've been waiting for all these results to come out of the lab. And then in the meantime, you suddenly pop up and say, hey, we've got our hands on a big bauxite deposit.
Yeah, so I'm not one of these people that just sort of sits on my hands, as at Atlas or wherever. Here at Arrow, since I started looking at the project and I realised the value of the infrastructure and the value of our project in accessing that, I thought, well, what else is there? What else could we bring online where we would get an order of magnitude scale benefit with our Simandou project? And the same thing goes. So with iron ore, we're going to be purchasing mining services. We're going to be purchasing shipping services. We're going to be building all sorts of road infrastructure, processing infrastructure, all of that. The bigger you are, the cheaper it is. And what's more, we were able to strike a deal with someone who owned that tenement, who was prepared to share value with us in that project down the line. So low price entry up front, It'll get a bit more expensive down the line when they get the benefit, but that's when our shareholders will really get a kicker.
So this project, known as Niagara, where does it sit in relation to the Simandou North Iron Ore Project?
So Simandou North is about 550 kilometres from the port. So it's almost at the end. It's about 675 kilometres long in total. And Niagara is halfway. So it's about 270 kilometres to the port. And it's 100 k's just off the line. And there's a road linking that line to our project.
So it's actually much closer to the port. Now, you've done a deal with the person who owns the tenement.
Yeah.
And what does that deal involve?
So it's 200 grand in cash and shares upfront. And that gives us a 12-month option to then purchase the tenement for $2 million in cash and shares at our election.
So what are you going to do to us? What's on there? You must have some idea of what it's about.
It's a good question. It's a matter. So there's been 2 companies go through and explore this tenement pretty actively. In the initial one, they came up with an estimate of resources. Subsequently, Vale came in and they drilled 211 holes on 800 metre spacings, and they must have had formed a view of a resource. Now, because of the nature of the foreign estimates that were estimated at the time, I can't quote those on the ASX, but I think that they're out there in the public domain, some of these things, and they'll get picked up in due course.
I was reading some scribblings this morning by Barry Fitzgerald, a legendary resources writer. Now, he made some observations. He did some digging. He found what you might call a foreign resource, as to use his lovely language, compiled by a Russian fella. And he says that was in the order of 290 million tonnes at 46% aluminium oxide. That's very high grade, isn't it? If that's correct.
It compares very favourably with what's being produced in Australia, and it presents in itself a reasonable basis to go in there and do a lot of drilling, and then complete a scoping study, and that's what we intend to do.
I mean, that resource estimate that Barry quoted, that grade of 46%, that's circa 50% bigger than higher, rather than what they're mining in the southwest of Western Australia.
Yeah, so it is. So Guinea is the world's largest producer of bauxite. It produces some of the best quality bauxite that's ever been known to man. So if you were going to actively go looking for bauxite, that's where you'd go. And you'd love to get your hands on hundreds of millions of tonnes of that stuff, because for all intents and purposes, the margins available are iron ore margins. And why wouldn't you?
So what are you going to do to decide whether you want to exercise this option, if you like, to take up the rights you've got? What are you going to do over the next 12 months?
Oh, it's pretty safe to say that when you're talking about what are we putting at risk, it's $400,000 worth of cash and shares. We'll confirm that we can get access to that data that's out there. We'll go in and we'll drill. We'll use the benefit of time to get a good understanding for what's there. But I really can't see us not executing that option. To me, it's a no-brainer. Basically, if you think of like for like, on that sort of a endowment that Fitzy was talking about, it's not unlike a gold resource of 7 to 8 million ounces at going better than just over a gram, but with no internal waste. So just think of that as a big, flat pancake.
Now, let's look at the bauxite market, because most people listening to the Whole Truth podcast probably don't know very much at all about bauxite. It's not really been the domain of the punters. It's not exactly a transparent market in terms of pricing. It's been the plaything of the really big boys, Worsley, Alcoa, Aluma and the like, South 32 in the south of WA. But therefore, people won't know much about it, but probably haven't got much interest in it. But the price has really started to move up, hasn't it?
Well, let's just talk about what you just said then for a second. You've got multinational companies mining bauxite inside a national park where they've got dieback and all sorts of community concerns and they're prepared to do that for a quite low grade product. And they don't do it because they're not making money. They're making really strong returns. And over the last year or two, bauxite prices have taken off. And fundamentally, there's a huge demand for aluminium. Now, that's coming from all sorts of places, whether it's high-powered transmission lines all the way across China, or whatever we want to install in Australia even, cars, solar panels. There's massive shift in change for demand upwards for aluminium.
Now, a lot of this aluminium and consumption of it, as you say, cars and the like, is in China. Now, China has historically generated quite a lot of its own bauxite, but it's running out.
Yeah, that's what people are saying. Yeah, so hence there's been a massive investment in Guinea in bauxite infrastructure, ports, rails, and there's been lots of profit generated by those companies.
So as you work out what you're going to do with this project and get the data and drill some holes, where does this leave you with the Simandou North Iron Ore project?
Well, I can chew and talk, chew gum and talk at the same time. You know what I mean? We can walk and talk, and it's basically just like having two projects. Say at Atlas, we developed Pardew, then we developed Wodgina, then we developed Abydos, then we developed Mount Dove, and then we developed Mount Webber. And next minute, we were the fourth biggest iron ore producer in Australia. In this case, I see us advancing both projects, and then we'll get to a point where we'll choose one, and then we'll execute that one, and then the next, and then we'll go back and expand it, and then that's going to be the business.
So where are you at with the iron ore?
So we've gone in and drilled about 10,000 metres, and we've got results that are pending. And we've already told the market that we've seen enough mineralisation there that it looks like it's going to be enough to justify infill drilling, scoping studies, and then going down the road of developing a mine. And that's the plan. We'll report the rest of those results and I'll articulate that strategy. Yep.
Some of the results you've been getting, some people might look at those iron ore results, Flano, and say they don't look like the results you're getting out of the big projects in the Pilbara. Does that matter?
Yeah, no, there's all these wonderful myths out there. So one of them is that, everything out of the Pilbara is going 63 or 64%. Well, that's just complete rubbish. So look, for example, I don't think FMG really have built their business out of selling anything over 59. Atlas, we really didn't sell anything over 58.5. If you look at the Roy Hill business, if you look at half of Rio's production goes out under 60%. Their Pilbara blend is averaging grade 60. There's a lot under 60. So the future resources and reserves from all of those projects have declining grades. That's a fact. Fundamentally, grade does matter because it drives the value of your product. But what matters more than your grade is your margin. So if you can, we were selling products sometimes at 53 or 54%, and we might only make $20 a tonne, but we wanted that $20 a tonne, so we would sell the product. And if there was capacity on the road or in a port, we would shift it down the road and sell it. So in Guinea, Simandou is the largest high-grade iron ore deposit in the world at 4.6 billion tonnes at 65 on our tenement boundary to the south. That makes the contained value of that nearly $1 trillion Aussie. Now, those things don't come along very often. And the reason it's the biggest in the world is that no one's actually found anything else like that anywhere. So fundamentally, they'll find a lot more there. And I think that is an amazing asset for those companies and for Guinea, for the people of Guinea. We only need some crumbs, like a little crumb of that deposit to fall onto our tenement. Or, it doesn't even need to be that great, but we'll sell it and we'll make money.
And you don't need those great big intersections, presumably, if you've got enough of it spread over a shallow enough, big enough area.
Yeah, that was another question we had. So basically, what makes more money, a 30-metre intercept or a 6.5-metre intercept? A lot of people think that 30 metres is better. Well, typically 30 metres can be, but often a 30-metre intercept is associated with like a, let's call it a load type structure, where your ore body might be 30 or 40 metres wide and long. Now, if you've got something that's 100 metres deep, 30 metres wide and 2.5 kilometres long, it works out to be about 20 million tonnes. But so does something that's 6.5 metres thick, 900 metres wide and 1,200 metres long. They both are 20 million tonnes, but the wide flat one will make more money because the strip ratio is next to nothing, whereas the other one, going down 100 metres, will have a strip ratio of sort of 3 or 4 to 1.
So it doesn't matter how you slice it and dice it, volume is still length times width times depth.
It is. So ultimately, you want to sell a product that has a margin and pays back the investment quickly. And we like to look at things where our payback is well under 2 years.
So what does the next 6 months hold?
It's going to be busy, really, really busy. So, if you look at the last 6 months, we got on the ground, we drilled about 550 holes, 10,000 metres of drilling. We've done 2 acquisitions. We've gone and delivered a lot of results to the market, a lot of met work. I've spent 3 different campaigns myself in Guinea talking to all the people that I need to. I've got a full understanding of the permitting process, the infrastructure from the owners to the constructors to the operators to the joint venture partners to the government. I've met all of those people 3 to 4 times each in some cases. So there's a massive learning curve that's got us to this point. We are going to be more busy going forward, and we're going to focus on defining resources, delivering scoping studies. I'm talking more about the metrics, the parameters, the partners, and the execution strategy. And because we love that infrastructure, I wouldn't be surprised if we did another deal on that infrastructure that was low cost and that had synergies with what we were doing, because as that infrastructure comes online, it's going to create real opportunity to do real things. And as I said before, my team who worked with me at Atlas and other projects, we've developed multiple projects, and that's when it starts to really hum. You have 1 managing director and 3 projects, 1 head office and 3 projects is better than 2. So, but we're not going to lose focus. We're able to execute these projects and make sure we don't drop the ball.
So is it open to you to sell a slice of either of these projects, the bauxite or the iron ore, as a way of bringing forward the value?
Absolutely. One of the things that's come back to us over and over again, that there are parties who are interested in participating at all levels. So let's just look at one area. So China has delivered this amazing railway line opportunity for Guinea. So there's groups that have come in and done the construction, and there's groups that have come in and basically supplied capital items, because the Chinese are amazing at delivering those capital items. So they became then joint venture partners in the whole Simandou project. So look at the plant and equipment that's being installed at Simandou. Look at the rail. Look at the stuff in the port. Even trucks, crushing plants. So groups want to deal with us before they were to leave Guinea, let's say. So there's going to be all this capability there. Some of those people want to think, how do we leverage that capability in supplying that equipment? You know, do we provide some equipment in return for this, equity in that project, or a mining service, or whatever, or offtake agreement, prepay? All of it's on the card.
So, Flanagan, what does this bauxite deal mean for Arrow and its shareholders?
Mate, this is about transformation. This is about taking the company from being an explorer that was just having a bit of a crack, right, to a company with 2 projects where we're focused on infill drilling, all of the economic analysis, partnering and development, and transforming into a multiple mine operation. Now, this is, Jim Collins would maybe call this our chance at a good to great moment, but that's what it's all about. It's not about sitting back and not having a red hot crack.
Flanagan, it sounds like a fascinating time for Arrow. As we said at the outset, bauxite hasn't been the sexiest of commodities over the years, but there's no doubt that you've got a tailwind with the price. I suspect the big boys are happy for everyone to forget they exist to get on with digging their big holes, as you say, sometimes in some rather environmentally sensitive places. And on that occasion, they've been able to get away with it. Certainly the clamps are getting put on them in Western Australia by the environmental watchdog, and things are getting a bit tougher for them. But at the same time, the world wants more and more aluminium, which means more bauxite. So the trend is your friend, as they say.
It is, and someone really smart once said to me is that the best place to go and create value is where you see a few operators think they control the whole lot. And if you look at what Andrew and Gina have done, and even Chris Ellison in the Pilbara, they've gone and created massive value because the majors thought they had it stitched up. Well, in Guinea, the bauxite industry has created opportunities for juniors, for sure.
Do I see Arrow coming with a slogan, the next fort's in bauxite?
No, it's not going to be. No, we're just going to give it a red hot go, Paul.
If I see you on the front of that Simandou train waving a flag, looking more like Andrew Forrest, I reckon the time will come to give you a good hard shake. Flano, thanks for your time. It's been fantastic.
No worries. Thanks, Paul.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.